Welcome back. You're still tuned into Halftime Report on CNBC-TV18. Well, for the markets, they've come off a little bit from the highs. So just a while back, the Nifty was up around 40-odd points. Now it's up 20. And banking names, those are the ones which are leading to this fall from the top. So the banking index is in the red right now. That one down 20 points. And the likes of IndusInd Bank, also Axis Bank, they are seeing some selling from the top. So just tracking markets for you because it could be a very volatile session ahead of the FOMC meet as well. But of course, we've seen underperformance in our own market, and this recent underperformance has turned several brokerages constructive on India. Nimesh is here to tell us just that and what these brokerages are making of the fall in the markets. Nimesh.
Hi, Sonal. So, if you look at the Indian markets, they've been down 6%, actually underperforming both EMs and DMs since the beginning of the year. And there is a lot of pessimism in the market, right? The sentiment is very weak, and that's the reason why a couple of brokerages have turned constructive, and they believe it's the right time. So, CLS has put out a note today morning. The headline is very interesting. They believe it's a contra buy time. In fact, the sentiment is very bearish, and that's the reason why they believe one should add beta into the India portfolio. Well, they have a proprietary India Bull Bear Index, and that is at a 91% bearish level. And barring few instances in 2008 and 2020, there has been such instances of 10 times, and 9 out of 10 times this is proved to be a good entry point according to the CLS note. So that's a important point to track. Now, in terms of stocks, they are advising clients to add Reliance, Hindalco, and IndusInd Bank to the India portfolio at the cost of Infosys and NTPC. So they've removed these two names, and they've added the names like Reliance, Hindalco, and IndusInd Bank. And all the stocks have actually been underperforming and are down 15-20%. So it's a good entry level according to CLSA. Similarly, Citi has put out a note today morning. Even they have a very similar view. They believe the risk reward is quite favorable at this point in time as far as India is concerned. And the key reason is India is down 6% Y2D. But if you look at the emerging markets or the developed markets, India has been a relative underperformer, down 8% and 11% respectively, and hence the risk reward is turning quite favorable. Even from a valuation point of view, we are pretty much close to that one standard deviation below the 5-year mean, which means a good entry point going forward. Even Citi has a sentiment indicator, and that has turned positive for the first time since July 2022. They are expecting mid-term returns, but it has turned positive as far as Citi note is concerned. Well, they have cut the multiples a notch to 17.5 times, but they have a March 24 Nifty target of 18,500. So meaningful upside from current levels. So, and they've in fact added in the preferred list Interglobe as well as GIL. The big point is that given the Indian underperformance, given the sentiment which are there right now, a lot of brokerages, including CLS and Citi, believe it's the right time to enter, and it's a contra buy time according to the CLS note.
All right, Nimesh, thanks a lot for that. So that's what CLSA believes. But earlier today we